Okay, good morning, everyone. Thank you very much for joining us. I'm John O'Halloran. I am responsible for CITFA's consultancy, which is CITFA Solutions. I will be your chair for this morning. Just as a little bit of housekeeping to start with. Firstly, this meeting is being recorded. It will be available to be viewed on the CITFA YouTube channel in due course. And as we go through, if you have any questions that you want to put to the panel, if you would put them in the Q&A box, which is at the bottom of your screen, then we will take them at the end, and we may take some as we go. So, good morning again. Is commercial activity ever justified in local authorities is the question that we've got the panel here to discuss and to take your questions. It's an area that CITFA has been doing a lot of work in over the last 18 months, 2 years. We're not going to give you a definitive answer. There is no yes or no. Many local authorities have been very successful in some commercial activities. Some, as you may hear today, have been less successful, particularly around companies as well as just general commercial activities. I think the key that hopefully you will get out of this morning is there's some practical examples and practical experience from the panelists, and also the view that if you're going to go into commercial activity, go into it with your eyes open and make sure you plan and take account of all the risks that will come with it. And also look at how you're going to get out of it if things do go wrong, because not everything that you do will always go well. So we're going to look at it from a practical perspective, and I'll just introduce the panel briefly. So we have Rob Whiteman, probably doesn't need any introduction to most of you on here. Just to say, as you would expect, he's been very involved in our work around commercial and around companies in local authorities, and the work that we've done for DLUC, looking at companies and commercial arrangements as well. Clive Heafy is very pleased to see that he's joined us this morning as well. He's currently CEO of Middlesbrough. Prior to that, he was Section 151 acting chief executive in places like Birmingham and Nottingham. And he's going to talk about the many diverse commercial structures and companies that he's found in these different places. Also very pleased indeed to welcome Adele Taylor. Adele is a Section 151 at Slough, and prior to that was at Windsor and Maidenhead. And Adele is going to talk about her experience of companies, but also bring that perspective of what happens when it goes wrong and what's the impact on a council and its residents. So we're going to take 30-40 minutes just to talk through some of the issues for you. As we go through, please, because of Zoom, there's no interaction other than through the Q&A box. So please put questions in the Q&A box. I will pick the questions out as we go and at the end, and ask the panel and see where we get to. So we are reliant on your questions, please. We aim to be finished in around an hour-ish. We've got no time constraints from our part, and we'll let it run as long as it needs to. So I hope you've all got lots of questions. I hope you find it informative, and I'll hand over to Rob to start us off, please.
Thanks very much indeed. Good afternoon, everyone. I hope you are well. So tomorrow we have the autumn statement, and we will see what the Chancellor has in store. Just by means of half a minute on general introduction and context, governments like to have giveaways in the run-up to the election, either in terms of tax concessions or spending more money on service priorities. And I think there'll be some of that in the autumn statement, and perhaps in the budget too, in the spring. I think the government has less room for manoeuvre than usual, although OBR's projections have widened a little bit on how much money may be available to the government. The Kwarteng Trust budget a year ago that spooked the markets because the sums didn't add up, and the government seemed to lose the UK's long-term commitment to consulting institutions such as OBR and the Bank of England. That completely spooked the markets, and that government fell. They can't afford for that to happen again. And so I do think that whilst there'll be a bit of help, I don't think there'll be as many goodies or sweeties as usual, however they're dressed up, because the government simply has less room for manoeuvre. That does mean a difficult time for public services, and it means a difficult time for local government in particular. We are getting close to the point where all authorities are finding it hard to balance the books. The authorities that have fallen over so far and had a 114 notice have probably been at the less well managed end of the normal distribution curve of the sector, and some have been spectacularly badly managed and made some very rash decisions, which we'll probably talk about in this seminar. But we are getting to the point where some well-managed authorities are speculating that they may be have proximity to 114. And although I think DLUC will help those authorities with a capitalisation order, ideally backed by capital resources or borrowing, it's a sticking plaster, isn't it, and not a medium-term solution. So it staves off the 114 notice and avoids the need for commissioners, let's say, but it doesn't actually give an underlying solution to an authority's budget. And the other side of a general election, we need to know what the future will be of local government finance, how will the sector be resourced, and have some form of fair funding review or redistribution, because there are some authorities that have a particularly bad deal and their resource situation is so hollowed out that they're heading for 114. So, of course, in the mix of all of that, authorities look at their commercial strategy to answer the question that John set at the beginning. Yes, it is reasonable for local authorities to get involved in commercial activity. But I think it's important from the seminar today, by the end of it, that we understand that people have a really clear idea of what they're trying to achieve. It's for strategic reasons, it's legal. People go into it with their eyes open, and also make sure that there's strong governance. Now, setting up companies is probably a broader agenda than a commercial strategy. People set up companies for development purposes, for housing vehicles, when they are sharing services or approaches with others, as well as commercial activity, where people want a form of return on it. Commercialism has been used a lot by some authorities, thinking it's a magic bullet, and there's no magic bullet. Some commercial activity might help on the margins, but it isn't a solution to avoiding the grind of good financial management, of making savings, of managing investments well, of persuading members to maximize their tax base. The good thing about setting up a company structure, or indeed if you manage commercial activity well through a company structure, is that public bodies are juggling 100 things at the same time. And the strength of the commercial sector is that they tend to be juggling one or two things, and therefore give it significant focus. And so through a team of people operating through a company with the right skills, the right investment, and the right strategy, they may bring some focus to commercial activity that is not easily brought to bear by public servants who are juggling a number of things. There are some fundamental differences, though. We are public bodies, And on the whole, we do things because they are worthy and we're interested in them and we think they're a good idea, or they have got a political mandate. That's very different to being commercial. Commercial companies do have a social responsibility. Good companies do care about social responsibility. But on the whole, being commercial is not asking the question, is this worthy and is it a good idea? Being commercial is asking the question, does it make money? And do we make a return on it? And the rigor of that is borne out by the way that you receive funding. So if you're going to have a commercial venture in the private sector, you will have to persuade investors it's a good idea. They're your shareholders and you regularly have to talk to them. And you have to keep financial institutions and the banks happy. And every time you're thinking of changing your model and what you're doing, or you're thinking of launching a new product, you have to convince your investors that it's a good idea, or you lose share value, or your capital is more expensive. We operate in a very non-commercial environment where we don't have that rigor. And actually, the Section 151 officer can call down PWLB almost at will, so long as it meets the test of the Prudential Code. And in the cases that have gone spectacularly wrong, where people have acted unprofessionally or illegally, it's where they've decided to massage the rules of the Prudential Code and to make business cases stack up that don't stack up. What if we use internal borrowing or inter-authority lending as a means of our cost of capital rather than PWLB, which is remarkably cheap as it is, by the way, compared to the commercial sector? But what if we stack a business case up by, in effect, not having it on commercial terms, but having interest rates which just make sure that we get the deal over the line? That is an incredibly uncommercial thing to do, and no commercial organization will do it. They will go through commercial governance after commercial governance after commercial governance, through an investment committee, through an audit committee of high-powered business people, which will usually qualify out most of the ideas because it won't make enough money, or the presumptions of it won't stand the test of time in terms of mitigating risk. So I'll finish, John, with just the thought that I think from the other speakers we will hear about the importance of commercial governance, what's worked well, what hasn't worked well. And I think I'm looking forward to hearing that. Because we're good public servants, it doesn't make us good commercially. And being commercial in the public sector is different to being commercial in the private sector. And I do fear that people think at times they've got commercial skills that they haven't, or business cases or worthy ideas or cunning plans are dressed up in a way to say that there's a return on investment in a way that the commercial sector just wouldn't countenance. And so we have to be much more rigorous as accountants about the way that we drive those business cases. But we also, as accountants, have to make sure that we have commercial governance which is stronger or more robust than the governance that we're used to on business cases for public sector cases, where we tend to rely on, do members want it to happen, and is it a political priority, and our job is to get it over the line. In the private sector, there is no impetus to get something over the line. And if you can't get it over the line, you happily go away and look to invest your money somewhere else. You only want to invest because it is a absolutely golden opportunity to make some money. These are very different cultures. And if we're going to act commercially, we need to have a commercial mindset and have people with a commercial mindset that guide the way we make those decisions. Thank you, John. You're on mute, John.
Yeah, that's a basic error for a chairman, isn't it? So Rob, thank you very much for those comments. I think one of the key things for me out of that is the different skills. And the other thing that comes out of that is that in local authorities, of course, we're governed by different acts to ones that are in the private sector for companies. And again, that needs to be taken into account. and I think will come out a little bit in the stuff that that Clive is going to talk about now with some of his experience, particularly around Nottingham. Clive, do you want to take it away, as they say?
Thank you, John, and good afternoon, everybody. Good to be here talking today. It's an interesting topic, isn't it, this one? And Rob very much set the scene in terms of the overall financial position for local government and the rationale behind doing commercial deals. And like Rob, I'm a fan of the commercial organisation as being a toolkit which a good authority, a good Section 151, will have available to them in order to manage the budgets, but also to deliver services. I think having worked with a number of authorities, big ones, the Birminghams, the Nottinghams, now the Middlesbroughs, etc., and others, which all have commercial entities attached to them, and I also have a couple of non-executive director roles as well at the moment. Just a few lessons I've learned over my life, really, to share with you, and then I'll go into a couple of examples of failure and a couple of examples, perhaps, of more successful ones. So commercial activity, I think, is justified. It needs to be supported, though, by a strategic reason to do it. It's not just a reason to do it in local government, just to earn money to get a return. It's got to be there for a strategic reason as well. And what I've found has been helpful in the past has been developing a commercial strategy. I'm happy to share a template with colleagues if you're interested, but a commercial strategy which is a test for why we're doing any commercial activity before we start that venture. What are the alternative ways of delivering? What are the outcomes that we're seeking to get from that venture? What are the business risks associated with that? What's the business case? And ultimately, what are the criteria that need to be met before we go into a go live situation or a go no go decision? So that commercial strategy I found very useful, and all too often I see authorities without a particular commercial strategy, and then they get blown in the wind by each commercial opportunity not being tested against predetermined criteria or anything that's consistent. Second one I'd highlight is that members need to be well informed, as well as officers, but members need to be well informed on commercial principles, the concept of being arm's length and the opportunities and risks that go with these ventures, and being clear, giving clear and unequivocal advice. One of the examples I'll give in a moment is where officers have had to speak truth to power to the members around whether they can do things or not. And sometimes the members will want to do things, and I've seen officers be dragged into that, not giving the advice that they want to. But I think officers here have to be really clear about that truth to power and make sure that the members are aware of the risks that they're entering going into commercial ventures. Third one I'd highlight is, and I've sort of touched on it already, is robust risk management. Commercial activities, if nothing else, carry with them a heightened degree of risk management, operating in a marketplace and operating in a governance structure which is often unfamiliar to officers and to members, and the importance of understanding the risks associated with it, the clear management of the risks, and also at the outset setting out what would be the exit criteria if we had to pull out of this one is all too often missing. And I think that's really important we do that. Number 4 would be, if we have officers and or members sitting as directors of the company, they must be given the right training. And again, I found it really valuable in setting up organisations like the Northamptonshire Children's Trust, which is a limited company, investing time to understand the legal framework in which the directors operate. So everyone's absolutely crystal clear about that. And particularly that directors have a duty under company law to the company itself and to promote the success of the company. And that's overriding any other role, which often conflicts them with particularly the member role. And fifthly, having robust shareholder arrangements. When councils put companies in place, LATCOs in place, it's important they separate out the role of the shareholder, i.e. to maximise the value of that company and ensure its success, with often the clienting role, because I've seen too often the councils work with the company to deliver services as well, when their objective is to push down price. And often those objectives can run counter, and it's really important that the shareholder role is expressed and run through a shareholder committee and some kind of governance arrangement that gives that oversight. So there's sort of 5 thoughts I have in terms of things that represent good practice. I want to focus a little bit on, and not in any great detail, but on Nottingham City Council. Nottingham had a number of companies, about 9 of them, and the total turnover of the companies actually was in excess of Nottingham's net revenue budget. They were a big thing. Just thinking of a couple of them, Robin Hood Energy is one that hit the press for a public interest report and governance failures, and where Nottingham needed to write off about £41 million worth of funds. Why did that go wrong? It was a perfectly good venture from a member's perspective in terms of wanting to do something to bring down energy prices, but then it was understaffed and under-resourced and flooded with directors in the form mainly of councillors who had no background in energy supply, the energy market, and who did not understand the volatility of that market and what to do. And as things went wrong, the council's propensity to want to say it's not going wrong, it just needs a bit more money, they continued to put more and more money into it, when actually the right thing to do and the right advice from officers at the time would have been to just, enough is enough, we need to walk away from this. And by the time Nottingham took that decision, it was too late. So early intervention when things are going wrong, but have directors with the right experience. Nottingham had Thomas Bow Construction, which was a construction company where they wanted to use the procurement rules in order to allow some technical work to be given directly on highways construction and get a dividend for it. In the end, Nottingham never got a dividend for it. It never paid out. The technical arrangement never came to fruition, and it just lacked the drive and the energy and the vision and the clear rationale from the council side, and we ended up having to sell that company. We got back what we paid for it, fortunately, but it was a wasted venture and a lot of management time and effort. Nottingham City Homes is the one time in my career when I've had to issue a Section 114 report for unlawful spending, when perhaps the lesson learned in that case was the lack of a client, because although Nottingham had got rid of their housing stock to an Elmo, it didn't mean they got rid of the statutory housing duties nor the oversight function with that Elmo. And the fact that it didn't follow that meant ultimately the Elmo did its own thing, started treating HRA monies as general fund monies, which the council then took back in the form of ever increasing dividends. And of course that broke the HRA ring fence, which was wrong. And that was a painful lesson, which again has cost the council probably in excess of 50 million. So between it and Robin Hood Energy, Nottingham's probably down 100 million on resources, which had it not been down on, would have left it in a stronger position. And Nottingham Castle Trust, perhaps a smaller one, but just a good example where the independent trust have been taken on to run Nottingham Castle without a lot of council oversight again, but also with massive optimism bias on the part of the trustees, which never came to fruition. And the minute they got into trouble, wanted to come back to the council for immediate support. It's a good example of where we had as officers to take a view with the councillors that you just have to let this company fold. What you don't want to do is to take on board all the liabilities, many of them unknown, back into the council without any oversight. We have to let it fold, and we have to think about how we reprocure something new in the future. So there's sort of 4 examples within Nottingham of things that went wrong, and Nottingham's work on changing its company portfolio and governance is excellent now, and that's getting into a stronger position. But I worked on these things for nearly 3 years, and my successor Ross will still be working on them as they're not sorted. Just a couple of good ones though to end on. In Birmingham, we had a company called a Civico, which was an FM company, got into some trouble initially, but working with the council, working with the directors, working with a new vision for that company, we nursed it back to good health with a proper purpose, proper governance, proper financial arrangements, and it's going strong today. So really pleased to see the work there, that it can be done. And one other example, again from Birmingham, Frontier Development Capital, using former money from grant funds like Growth Fund from government, etc. We were able to set up a company which supported SME businesses locally and ultimately across the UK as an alternative to bank lending, and that's been managed in a really successful way. And Frontier continues to support young businesses in Birmingham coming into fruition through incubation and then back to full strength and health. So, some good examples there, some bad examples, but yes, companies that are run properly, I think, have got an awful lot to offer. So, John, before I hand over to Adele, are there any questions that
Yeah,
you want me to take?
Yeah, Clive, one of the things I think, just building on what you've said there with your experience of a number of companies and the point that Rob was talking about, making sure you've got the skills. How easy did you find it in both Birmingham and Nottingham to attract commercial skills or people with commercial skills to run the companies? Or did you move local authority offices out into them? How did you go about that? Because really it is a different skill.
Yeah, mixture of both. We moved out. We tried to minimise the number in both cases of members who were sitting as directors, particularly members who were obviously conflicted, chairs of audit committee, members of the executive, leaders, etc. And those that we did, and officers, we put through instituted director training for what director responsibilities looked and felt like, and just to make sure that everyone understood those. But actually, using the networks in a local authority, you can often reach out through the Chamber of Commerce and through other connections into the business community to find people who've got the community at heart and want to deliver things, but can also bring those natural business skills to a model as well. So I think I've never found it particularly difficult once we start using those networks. But I think the key thing, and the Robin Hood Energy was perhaps the big one for me, don't flood it with members. Just do not flood it with members, because the best will in the world, A, they're conflicted, and B, they don't have the natural skill set, nor the separation, nor the commercial skills to be able to deliver that.
And can I just add to that, John, if it's all right? I completely agree with what Clive has said, that in terms of the governance, you want people with experience of that sector who act as non-executives in a very robust way. I think your question, though, is a broader one about the people working in the commercial entity too. And I think what bad looks like is where the same people somehow paid themselves more money because now they're being commercial, and that's just not on. I think what good looks like is the authority sets up the commercial activity in a way that it recognizes people may earn more than the people that are commissioning the company. I mean, the point is that pay in the private sector tends to be higher than in the public sector for particular skills. And so if you do set up a company and you get people with the right skills, in the commercial world, you would incentivize them by having some ownership of the company and perhaps being on a share incentive scheme. That's harder to do when we own the whole company, and we don't want to give some of that to staff. But it's perfectly reasonable to incentivize people and bonus people on performance, so long as they've got the skills to do it and they're the right people that you want to attract. I think where you and I see it go wrong at times, John, is where it sort of has become a proxy for paying the same people a bit more money because they're now involved in the company as well, and that's just not right.
Yeah, I think just before we hand to Adele, and we've got other questions in the Q&A, which we'll come to straight after Adele, but I think there is an issue about when new companies are set up by local authorities. Certainly in what we've seen, there's been an awful lot of them where their people are just, if you like, rebadged and go into, rather than actually grasping the nettle and going to the private sector and buying the right skills.
Exactly. That's the point I'm making.
Yeah, they are different skills.
They are.
Okay, thanks, Rob. Thanks, Clive. Adele, over to you, please.
Thank you, and good afternoon, everybody. And it's always nice going last because some of the things that you might have said have now been said. But I suppose what you're really looking for is a bit of a kind of personal reflection from the last 8 months. I can't believe I've been at Slough for 8 months. And I think it's really, for me, around thinking about the things that, if things have gone wrong, what does that actually mean for staff and residents? And actually, what can you do to kind of turn some of those things round? We often talk about the Golden Triangle. Now, there's 2 of those, and I think both of these are really, really important in those situations. The Golden Triangle of your statutory officers. So your Section 151, your monitoring officer and your chief exec and head of paid service becomes incredibly important in terms of their understanding about their links with companies and commercial activity, and ensuring that they really understand what has gone wrong and therefore the impact of that. But also the other golden triangle that we talk about often is around performance, finance and risk. Captain Hindsight is a wonderful thing that if only we all could have the hindsight at the beginning rather than at the end, that would be really helpful. But you can clearly see in a place like Slough, where actually, companies were set up for potentially very noble reasons, for quite good reasons. But actually, what was never done was all the things that Clive and Rob have been talking about in terms of that piece around really understanding what's going on in the company. I think the other thing that's really important, we've talked a lot about the commercial skills, and I agree, where I've worked with companies elsewhere before, putting people through the Institute of Directors, I think is a really useful and I would say almost imperative tool to do, because people do need to understand the different hats that they're wearing when they're in a company situation versus the council. But just as we think about the commercial skills that you need for that company, there's also a commercial awareness and understanding of that interface between the companies and the council and what that means, which is sometimes actually where I think there is also weaknesses that isn't always recognised. So people don't always understand the questions they should be asking in terms of, and what does that mean in terms of the link between the council and what will happen if it goes wrong. Commercial isn't a bad word. Commercial, I would argue, isn't bad, and I think both Clive and Rob have acknowledged that. But only if we understand in the first place why we are doing things and the reason for it. So if you look at Slough and the situation in Slough, actually some of the commercial deals, some of the things that have been done were not actually a complete disaster. Actually, they were done for the right reason. The trouble is that we sometimes then, as Rob has said, we see it as a silver bullet. And fundamentally, actually, why are we doing these things in the first place? For me, a personal reflection on the Slough situation is actually, in many ways, it was because tough decisions weren't necessarily being taken elsewhere in the council to say, actually, these are not going to be the thing that rescues us, but actually they could support us in our journey. So actually, if you've already got a weakness in terms of your internal controls, your ability to kind of cap your spending and thinking about how you manage your resources in the right way within the council, actually having a commercial entity that's also sitting alongside it, probably with similar people looking at it as well, that's not going to solve any of your problems. Because actually now all you've got is double the weakness and double the size of risk. So there's something for me which is actually, before you even think about anything, whether it's new commercial or kind of monitoring what you're doing, is really thinking about actually how good are you at governance and the rest of the organisation, and therefore what's that going to do if you hold a mirror up to yourself and in terms of that commercial those commercial entities. As local authorities, we've always had to be commercial in some respects, but again, it's having the understanding of what you're trying to do and what you're trying to achieve. Just as a commercial organisation, Rob has already mentioned, they'll make decisions based on the return. Now, it may well be that it's not a financial return, and we've already, talked about some of the companies, so housing companies, so Almos and children's trusts, where actually your return is actually the delivery of services for your individuals. However, I think the biggest thing that we sometimes lose sight of is that if it's in a company situation, you are not losing the fact that you still have statutory responsibility for statutory services. And too much have we seen in the past that actually people almost think that they've handed over the rest to somebody else. Well, actually, if our children's services are struggling, and we all know that that's a situation across nationally, just because it's in a company is not going to make it any easier. to manage those situations, and in fact makes it harder in some respects to think about the fact, because we're asking a company to manage things on our behalf that actually the rest of us are struggling with too. Ultimately, and it's something I've been talking about ever since I've been at Slough, and not just at Slough but before this, but particularly focused at Slough, is in all of this, when things go wrong, the people it hurts is staff, but actually is our residents, because who picks up the pieces when a company folds, or the council has to find a way to fund the mistakes, the errors, whatever you want to call them, the misjudgments, is ultimately our residents. And the biggest thing for us is also around building trust with our residents. So I'm not going to repeat what the people have said, because Clive and Rob are much more eloquent than I am in terms of, the governance and making sure we've got it right. But actually that governance is really important, to understand that if things are going to go wrong, nothing ever goes right 100% of the time. We all know that. So therefore, when budgets are tight, when financing is tight, we have to think about what is it that we need to do in terms of cushioning what and mitigating those risks that could happen. And that you can see in places like Slough is where people lost their head, I would almost argue, and went too big too fast and didn't think about necessarily the consequences. However, I suppose I'm going to put a little bit of an optimistic spin on some of this, because actually part of this is some of the commercial developments at Slough, so some of the property deals, some of the things that were done for the right reasons. But actually, did it ever need to be us that delivered it? Or could a partnership, a relationship, any kind of perhaps a different venture, could we still have delivered the things that we wanted to? We just needed to work on relationships with perhaps a private sector who are in a better place to deliver this than actually wanting the control ourselves. And I think there's something for me in all of this, which is really those test questions, which is, are we the people who know the most, know the most about this, that can deliver the thing that we're trying to do? Or is it that we need to work with somebody, impart the knowledge that we've got about our local area, and actually use their skills in a different way, and we can still deliver the same things? So we're in a situation where we're having to sell, for example, some of our commercial property because of the capitalisation directive. But actually, if you look at some of the deals that we've done recently where we've sold property, actually by building the relationships with people who may want to buy that, we're actually still delivering the thing that we wanted to do. So we are going to be able to deliver the affordable housing. We are going to be able to deliver the place-based changes that we need and our residents deserve. So actually, is there something about the energy and capacity of the organisation to work those relationships? And would it be better to do that than perhaps trying to step into a position where we are trying to act in a commercial way, which actually somebody's already got those skills? And isn't that something that we do on an everyday basis as local authorities, which is identify the skills gaps, we fill those skills gaps, and we work with people to deliver hundreds of services, but we take the best from other people. So I suppose from my point of view, there's something at the very start of any of this is really questioning whether we need the control. Do we actually have the skills? But actually, are there people that if we just worked a bit harder on some relationships, that we could still get the outcome that we wanted, and actually do it in a way that doesn't risk our residents, in the case of Slough last year, having to pay additional council tax as part of an exceptional support package? So I suppose that's my pitch.
Okay, thanks very much, Adele. It's really interesting, particularly the impact that it has on the residents of Slough, in that case, and the residents elsewhere, because other local authorities, it is having an impact. And we've got a number of questions. first one I'm going to pick is it possible to completely remove optimism bias from an organization? And if so, how? Interestingly, if I put that to the panel, but say, I come from both the private and the public sector background. In the private sector, optimism bias isn't so explicit because of the amount of hoops you have to jump through before you create a company if you're another company. But interested to see what the panel say. Rob, I thought Rob would like to go for this one.
Thinking out loud about this, there is something commercial about having some entrepreneurial zeal to believe that you can make something a success by investing in it and getting the right group of people and making a return. And so in a way, some optimism that we can problem solve and get things done is good. And very often commercial people that one comes across are entrepreneurial in having a belief that they can problem solve and get things done rather than put barriers up. However, if things start to go wrong, optimism bias is really dangerous, isn't it? Because, you know, when you're in a hole, stop digging. And if things aren't going wrong and the model and the market and the entity are not performing as one expected, I think in a lot of the cases we've seen, people could have probably limited their loss by stopping earlier. But it's almost as if, oh God, this hasn't gone as well as we planned. We better put a bit more money in it because it will look terrible if it fails, and then it fails by a bigger number. And so I think a bit of optimism bias up front is a good thing. But as John said, remember that the commercial sector has considerable hoops to go through in order to test that, because essentially, I'm sorry to repeat myself, investors don't mind whether something goes ahead or not. They're not desperate to get it over the line. They'll go and invest in something else and get that over the line instead. What most interests them is the return. And I think commercial governance linked to a bit of entrepreneurialism is a good thing up front. But the governance can't have an optimism bias if it starts to go wrong. And I think how the public servants have the skill of cutting their losses and saying the difficult message to the public, we actually decided to cut our losses on this because it wasn't going as we thought it would, which is a brave thing to do and ultimately avoids a lot more risk if it's not going to correct itself. You would have seen in the media, the trade press this week, that Woking is being given another 78 million in order to finish some of the schemes in order to then make a return on them. These are quite brave decisions, aren't they? And these are decisions being made by government and the commissioners because it's felt that so much has been lost. We better just finish it and we'll make a bigger return. They're probably doing the right thing, but in a way, it's not necessarily how the commercial sector works, which is let it fail, pick up the pieces and start again. And these are very interesting sort of different outlooks on what you do when things go wrong.
I'm going to bring Clive in there, but I think it's very interesting in the sense these are different skills, different ways of looking at things than traditional local authorities would have looked at it if they were just looking at delivering services. You know, and it is a more complex way of doing it. Clive, sorry.
And Rob said an awful lot of what I would say, and I concur entirely. What I would say is there's an optimism bias cycle in my mind. So when a council is setting up a commercial venture, it needs to, at the outset, be doing plenty of scenario planning and looking at all the variables that can work or can work against it, and working out if X were to happen, we would do Y. If Z were to happen, we would do A, etc. We work the way through. And that scenario planning at the outset, before you even set that venture up, will tell us whether we can actually afford to do that, or if it went wrong, actually we'd be in serious trouble. So there's that element of it. There's an in operation from the council perspective, and the examples I gave of Robin Hood Energy and perhaps Nottingham's Castle as well were examples of where the members just so wanted it to work. They just believed that it could either work by itself, or if we pumped just a bit more money in and just a bit more money. And there, I think the management of optimism bias is about setting parameters beyond which we won't go. And as soon as we breach those parameters, we're clear on those. And that's clear with members as well. But look, I get as much as anybody else the passion at a local level for wanting something to work for the community and how members get involved in this. And then the third layer is the one that Rob touched on, really, which was about the company itself in operation will be doing constant checking and reviewing against its key metrics to see whether things are going wrong. And particularly that comes to light when you talk about matters of going concern or the like, where the company has to be alert and make some difficult choices. So that one I won't cover because Rob's covered that one. But all three levels are areas where we can manage optimism bias, but no, you'll never manage it out of an organisation completely, I don't think.
Okay, thanks, Clyde. Adele, did you want to say something on that?
Yeah, I was going to say, I think the difficulty is that what's the opposite of risk is opportunity. So the trouble is, if we become so negative and strip out all optimism bias, actually we almost paralyze ourselves and create larger risks. So just to add an extra kind of element to this. So, but I agree, it's got to be around. It's the tests. We have, we already have tests in the rest of our kind of financial world and our lives, Prudential Code, for example, we have tests and we have levels and barriers. So it is really at the beginning thinking through what those levels and barriers do. But we are in danger that if we completely stripped out optimism bias, that we'd actually paralyze ourselves and just end up doing nothing, which in itself is possibly a bigger risk and a bigger issue.
Okay, thanks, Adele. Interestingly, in the questions, there's an awful lot of questions around the issue of failure, but also the point is made that failure happens in the private sector as well, which obviously we know. I think one of the key things that's been asked as well in this is how do you what do you consider the key issues when deciding to whether to turn around or exit a commercial venture? And that's linked, I think, also to how do you tell the members and on that, because obviously members, don't. And Clive, you referred to that on Nottingham and the Castle, but there's a lot of other companies. So, in terms of, is there any key insights about how what would make you exit a company? Other than, I guess, the fact it's losing money, because that's the acid test.
It's one of the tests, John, but if we have a clear commercial strategy at the outset, whether it's a commercial deal or whether it's a company, if we have that at the outset, we've got clear parameters then about what that commercial deal should be doing for us, both in terms of service outcomes and in terms of its finances. And it's being realistic with ourselves that once they start to go wrong, we have to then get the red lights flashing and put some attention into that company. And the earlier we can take remedial measures, the more opportunity there is to pull it back. I refer to one of the positive cases. I noticed one of the attendees, I think it might have been Richard, talked about positive news stories, and Civico in Birmingham was a great example of one where we recognised those metrics were going wrong and the company was at risk of collapse. That happened to be a company, but was delivering commercial things for the council. Was going wrong, and we put right those issues. We sat down and worked out how we could put them right, how we could get the outcomes back on track, what the council could do both as a shareholder and as the client of that company, and what the financials and the reporting and the metrics needed to look like. And by doing all of that, we got that company back on track and nursed back to health again. So that early intervention gave us the opportunity then to do it. Whereas perhaps in the case of something like a Robin Hood Energy in Nottingham, that just wasn't realised at an early enough stage and gave no chance to recover that situation, both in terms of the scale and the outcomes and the necessary actions to bring it back to health.
Adele?
Yeah, I was going to say, I think one of the other things is we also have to, you have to go back to what was the original purpose of the company. And at times the failure might not actually be financial, but actually it might be, are you stepping away and you're moving away from your original purpose too much, too far? Is that so? That's one of the questions and the kind of acid test, I suppose, that you'd expect as well. So sometimes it isn't financial failure, it's just actually that you've stepped away or circumstances have changed, and therefore thinking through whether it is something that you want to continue with or not. So one of the companies, for example, I was at Cherwell and they had a if anybody's a fan of Grand Designs, The Street, that was the company that was owned by Cherwell, that was originally set up as a custom and self-build site, but more as a self-build site for people to kind of purchase and buy property and things. And actually, it became really apparent that not as many people wanted to self-build, so it became strong on the custom. But it was still a question that the company asked itself was, actually, are we still fulfilling the purpose that we wanted to? Now, in that circumstance, it was fairly easy to kind of go, actually, we just expand the purpose of the company. But it was still right to ask the questions, which is this delivering what we expected it to deliver at that particular time? So I suppose that's something else that I would say, that it's that check back and check balance and checks and balances on what was our original purpose and should we be continuing.
Yeah. Just to add, I really agree with everything Adele and Clive have said. I just going back a little bit, I think Adele's point about the risk of doing nothing is a risk, and that's always worth thinking about, isn't it? However, the other point to make here is the public probably do expect a more risk-averse approach with the money that they've paid in tax than an investor is willing to make with their capital. And so I do think there are extra bars to go through with public money. And we should always ask ourselves, would we use our own money in this way? Would we, if this were my savings, if this were my pension pot and I relied on it, would I do this with my own money, or am I only willing to do it with the council's money? And I think it's a worthwhile risk, but my God, I wouldn't go near it with my own money. There's a couple of times when to exit a venture. I mean, number one, if it was set up for the wrong reasons and in hindsight, you're not sure it's working. I think, John, you and I have, and Clive and Adele, we've seen some local authority companies set up, maybe where it wasn't clear what can we do next. We don't want to outsource it. We don't want to keep it in the house. We'll put it in a company. And actually, if something's going to flourish as a company, it's because it's got skills that other people will want to buy. And if it just becomes a sort of how much guarantee and how much loss is there between the shareholder and what is in effect a council service, there can come a point when it's time to wind it up. That said, look at the incredible success of some trading companies that local authorities have set up and have traded for other local authorities and have made considerable returns and sums of money, and have helped those staff have better terms and conditions than they may have employed with the council. So these things can work. But I think, number one, if it maybe shouldn't have happened in the first place. Number two, if you're going in above your neck, and the parameters and the scenarios that Clive set out at the beginning don't look like they're happening, then it's worth cutting a loss, isn't it? And thirdly, of course, over a period of time, council strategy may change. And what if suddenly you want to prioritise, I don't know, housing development a lot more, where a few years ago you wanted to prioritise energy, and now the council wants to focus its limited bandwidth on doing something different. So successful businesses are built because of long-term commitment, long-term success, the right people making a return through robust numbers. If you think that isn't going to happen, it is a good time, to review things. The main thing all of us would say, for God's sake, just don't put more money into it because you're worried that it'll look bad that you've made a loss, because it will just get worse, won't it? It will just get worse if you think you're putting more money into a failing venture because you're one is embarrassed that it hasn't gone well, it is always better to cut your losses earlier in a commercial sense.
Thanks, Rob. I think I'm conscious of time. We said we'd do an hour, but we've got a number of questions, which I think is on a topic that I think is worth looking at in the sense of the three of you here, and that's your views on the role of audit, external and internal audit here. Rob, do you want to go first as the CITFA person?
So both play a very important role. Internal audit is a management function, and ideally you don't treat it as an external function. You give internal audit the things that you are most worried about and the risks that you are most worried about. Good internal audit plays a really important role in helping to scrub things up and make them, and to mitigate and control the risks. Bad internal audit becomes a tick box exercise on processes rather than actually looking at risk. I'll surprise some of you by saying there's some really, I think, for example, CITFA sits across local government and health. Internal audit is better in local government than it is in health. Probably on the whole not as good as it is in central government, where internal audit has developed a more strategic approach to looking at organizational risks with the board. So the on average, the quality of local government internal audit probably sits somewhere between health and central government. It's a shame what's happened to external audit, isn't it? I can't think of an administrative reform that has had such a devastating effect on the public purse as the Pickles destruction of the Audit Commission and local public audit. For 100 years, local public officials helped us to improve value for money, and it's a tragedy that that's gone. And I do genuinely believe that when people started to do some things against the rules on borrowing and in advance of need, or using capital resources for minimum revenue provision, in the old days the district auditor would have stopped that and said, you can't do it. And I've seen other people do it, and they acted in a standardized way on treatment, which we lost. I think we're a bit of a way yet from having the external audit that you need and deserve. There are 900 unaudited sets of accounts across 300 odd local authorities. Only 5 sets of accounts have been signed off this year. It's a tragedy, which we could talk about all day. My one piece of advice is, when we do get through the backlog and some more fees have gone back into the system and we have a better market for auditors, I know all of those are big ifs, and so Sir Tony Redmond's review has been implemented by the government. It's really important to treat the external auditor as your friend. I worry, Clive and I, we can look our age here, can't we, Clive? I was first a CFO in the 90s, the auditor was my best friend. Mm-hmm. And I used them and I shared with them what I was worried about and what might go wrong. I didn't treat them as an external party that I just wanted to tick and sign off my accounts in a commoditized way. So when we do get better district audit, treat them as a local public official and share your risks and concerns with them, rather than manage them as an external party, because that's when it works best.
Thanks, Rob. Adele, any reflections?
Yeah, I mean, I could not agree more with that final comment. I wasn't a CFO in the 90s, just to be clear.
You're too young.
Before anybody says anything, but so it wasn't that point, but it was around. But it was the external auditor point. I mean, I have to say I was very fortunate, and actually I will name and not shame him. Neil Harris, I was very fortunate. He was my external auditor when I was at Cherwell, and I first arrived there and was talking through some company issues. And the fact that we could have each other on speed dial sometimes just to talk through issues, I think was incredibly helpful when I was trying to. And at that stage, this was the stage when, I had a couple of sets of accounts outstanding and was And at that stage, it was a real, felt like a real issue. Whereas now I've got several sets of accounts outstanding at Slough. Still a real issue. Please don't get me wrong when I say that, but it doesn't feel the pressure that I had at that point in time. But absolutely, I do remember having conversations with Neil Harris at the time, which were so helpful, because it was almost a case of, I'm thinking of, is there any reason why I shouldn't? And again, this was where things hadn't gone quite so well, because it appears that my career has been a bit more on trying to fix people over the last few years. So for me, I think it is a real shame, that kind of external audit. And I should say that the external auditors I have now working with me at Slough I am lucky again, because I've got some really good people. But that's because I'm in intervention. And isn't the case for everybody else. And it shouldn't be that we get to the stage where you have to be an intervention to get that kind of level of support. For me, the other thing that we've done at Slough is we've brought our internal audit function back in-house. We had an external provider, and I think that's one of the biggest strengths. And I think, and it's not just on the commercial, but on the internal audit. If you look at, it is our responsibilities as Section 151s. You know, I have significant number of outstanding internal audit actions, whether they're company or everything else, over several years. And I think that the internal audit function weren't used properly and viably. And actually, I'm really pleased, you know, we've brought them back in-house this year, and they, to me, are such an important tool and an important part. I talked about that kind of golden triangle of the statutory officers, but actually one of the biggest and most important relationships in the OVIS is also with my chief internal auditor, and their independence and their opportunity to go, actually, you're not doing things right. And so for me, I think internal and external audit are tools that we should use better.
Okay. Conscious that we're just going slightly over, I think we've, in terms of the questions in the chat, I think we've covered most of the key topics, if not every question. And so I think what I'd like to do is to thank on your behalf the panelists, who I think have not shirked away from making some controversial comments, but very honest comments, which I hope you all appreciate. I think in terms of the question, which was, is commercial activity ever justified? I think what we're hearing from the panelists, and they can shout at me afterwards, is yes, but it's not an excuse for not taking tough decisions elsewhere. It's not instead of running the council in an adequate, proper way. But in terms of when you do go down a commercial route, be very clear why you want to go down that route, and also put the necessary controls and governance around it. And I think one of the other points that I think came across, which was interesting, is review them. The world changes, so make sure that you need to ensure that they're still delivering to the original cases and reasons you set them up, but also that you still need them, because the world does change. You know, there is a time when you would want to bring stuff back in-house or do a different thing with it. So it's not a thing that once you set it up, it shouldn't be there forever. But if I can thank everyone, thank our panelists and thank everyone for attending. We will respond to the request for information in the question and answers. And I hope you've all found it interesting. If you want to see it back, it is on the Sit for YouTube channel. So thank you all very much indeed. Have a good day.
Thank you all.